Molweni sanibonani dumelang. Spinesa we have a video yetu, and in today's episode we are talking about home loans. If you are looking to take up a home loan in the foreseeable future, then this video is definitely for you, and you want to make sure that you watch it from beginning right through the end. But and you are watching Money Conversations with Namta, a channel where we talk a great deal about money, investments, and all things personal finance. So, masingeneni kwi topic yanamhlanje. Anytime you take up a home loan, you want to make sure that you consider these 5 things. Number 1 is deposit. You may be required at least 10% to pay upfront as you are given the home loan. However, there are lenders that may actually offer you 100% loan of the purchase price. If they are giving you 100%, that will also mean that it will take you longer to pay back the loan, and it will also result in you getting a higher interest rate. So this is a no-no basically. If you can also increase the deposit. The higher the deposit, the faster it will take you to pay back the loan, and also the lower interest rate you will attract. The second one is interest rates. So let's first start by explaining what a repo rate is and what a prime rate is. So a repo rate is the rate that the South African Reserve Bank lends money to commercial banks, your ABSA, your Standard Bank, your Capitec, and Nedbank, right? Exactly. And then your prime rate is the rate at which the commercial banks borrows money to consumers. There are particularly 2 types of interest rates that should be of interest to you, no pun intended, when you're taking out a home loan, and that is the variable interest rate as well as a fixed interest rate. So a fixed interest rate is one that is fixed, it does not change. Typically a bank will offer you a fixed interest rate over a 5-year period, okay, after which you may have to go back to them and actually sit down with them to discuss a way forward. But it is very important to note that usually a fixed interest rate is usually higher than a variable rate. In other words, it's more expensive to decide to go for the fixed rate option. Whereas with the variable interest rate, it is linked to prime. It is one that's linked to prime, and which is also linked to the repo rate, as we have seen this year alone, how the South African Reserve Bank has cut the repo rate down to 3.5%, which has also seen the prime rate to be sitting at 7%. Okay, so if your home loan has been on a variable rate, it means that you have benefited from all these rate cuts. However, it also means that should the South African Reserve Bank implement a rate hike, again, you will also have to your interest rate will also change, and it will go up. And yeah, exactly. A good credit score allows you to have a good interest rate. Okay, so when you have a good credit score, it communicates to the lender, or it sends a message to the lender to say you are a responsible person that is able to take care of your debts, to pay your debts on time, and you have this generally, it's like a good reputation for you in terms of getting credit. Okay. And therefore, the lender, you are basically now have become a low risk to the lender, and hence they are giving you or may offer you a lower interest rate. And if you know you have a good credit score, you could also be more confident in terms of negotiating a lower interest rate for yourself. And then number 4 is access bond. An access bond offers you some flexibility. All right, it means that you are able to put in extra payments towards your bond repayments, and also those extra funds that you have in there, you can always withdraw them when you want to do so, without being penalized or anything like that. So this is also a great way to put your emergency fund in there. And yeah, we talked about an emergency fund. Look out, I put the link to what an emergency fund is, so make sure that you watch that video as well. Whenever you are able to pay extra, that means you are reducing your loan term and also killing interest and saving money in the process. And number 5 is compare loan providers. So don't just go with one bank and then start to get excited that, oh yeah, I got my home loan approved. No, start to compare, go to different banks, go to all of the banks, and compare them against each other. So go to Bank A and say, look, this is what Bank B has offered me. What are you guys offering me? Go to Bank C and say, look, Bank A and Bank B are saying this. This shopping around process is likely to help you get a better interest rate, a lower interest rate, and also not just the interest rate, but also looking at all these other 4 things that we have discussed. So let's do a quick recap of the 5 important things that you need to consider when purchasing a home. Number 1 is deposit, the higher the better. Number 2, interest rate, the lower the better. Number 3, credit score, the higher the better. Number 4, excess bond, the flexible it is, the better. Number 5, compare home or loan providers. All right, so I hope that you did find this video helpful, and if you did, please remember to give us a thumbs up and comment down below. Also let us know your thoughts and what you would like, anything you want to say, what you'd like to see in the next video, etc. And I'll see you guys in the next one.